Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but is limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Certified Advisory Corp is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Stay tuned for On the Money, Central Florida's most listened to financial call-in show, brought to you by Certified Financial Group in Altamont Springs. It's the only show hosted exclusively by certified financial planner professionals. Monday through Friday, their CFPs provide financial planning and investment advice for a fee. But on Saturdays, the advice is absolutely free and has been for more than 30 years for their WDBO listeners. If you have a financial question you want answered by real fiduciaries, the lines are wide open. Call 844-580-WDBO. That's 844-580-WDBO. And enjoy the show.
Welcome to On the Money right here on WDBO 107.3 FM AM 580, always streaming live inside your WDBO app. My name is Josh McCarthy in studio today, answering your questions, well, really just answering your calls and then passing your questions on to the ones who have the real answers. Those are the experts at the Certified Financial Group. Today we got Joe, Bert, and we also have Gary Abely, a couple of certified financial planners with the Certified Financial Group, answering your questions. Maybe you heard something on the news. Maybe you heard the market closed at a record high on Friday, and you want to know, I might be able to capitalize on this trend a little more than I am, and I just want to find out a little bit more about what I can do and get more money. That's what we do here on the Money Show, brought to you by Certified Financial Group. I invite you to call 844-580-9326 if you have any questions. The team at Certified Financial Group has been on the airwaves of WDBO for over 30 years now, over 400 years experience with financial advice inside the four walls of the Certified Financial Group. So call in now. How are you guys doing today?
We're doing great, Josh.
Terrific.
Good to be with you this
awesome.
morning. Well, Gary and I are to take questions, as you said, anything that might be on your mind regarding your personal finances, as we have done now for more than 30 years, speaking to our listeners throughout Central Florida. And we're glad to be with you once again this morning. And I am pleased to announce we have a special guest. As our regular listeners know, Gary and I and our 14 other certified financial planners, our strength is really finding the best money managers out there. We use mutual funds and ETFs. We are not stock pickers, and we leave that stock picking to those mutual fund managers or ETF managers. And our strength is, once again, is to find the very, very best ones out there. So we're delighted this morning to have one of those gentlemen with us this morning, a gentleman by the name of Christian Heck. Christian is a portfolio manager of the First Eagle International Value, International Equity, and U.S. Equity Dividend Strategies. And he's an associate director of research for the Global Value Team and a senior research analyst covering industrials, gaming, electrical equipment, and technology. Prior to joining First Eagle Investments in September 2013, Christian was a research analyst at Paradigm Capital, a value-oriented hedge fund based in Germany. He also interned with Waterland Private Equity Investments and the Boston Consulting Group. Christian earned his Bachelor of Science in Business from Rice State and an MBA from Yale School of Management, where he was a Silver Scholar. And he is also a Chartered Financial Analyst. And that's a heck of a designation to get. I can tell you, it's a very, very difficult designation to get. And we're proud to have you this morning, Christian.
Good morning.
Good morning. How are you doing?
We're doing great.
Wonderful.
Glad to have you with us. What part of the world are you calling in from this morning?
I'm calling from New York City. I'm calling from Manhattan, but as you can hear from my funny accent, I'm from Germany originally.
Aha. How are things in Manhattan this morning?
They're good. Not quite as warm and nice as in Orlando, I suppose, but not too bad.
All right. Well, welcome to the program. As I told Christian via email, this is a open-ended call-in show, and I thought it'd be interesting. I was thinking about that this morning, Christian. The various things we can talk about. A day in the life of you. What do you do from this day you get in the office And what does your day look like? Where do you start? What do you look for? And what's it all about? And how many? First of all, how many people do you manage?
Well, we have a team of about 25 investors on the global value team at First Eagle, and what we're trying to do is we scout the world for good businesses that we can invest in, and we usually do that sort of on a long-term basis. We have 7 to 10 years in mind, and we spend our time trying to find good investment opportunities. We're stock pickers. And we do spend some time in the office, as you mentioned, but we travel a lot. I travel all over the world, meeting with companies and trying to unearth good investments. When I'm in the office, it's a lot of reading, financial filings, annual reports, conference call transcripts, and then also a lot of conversations with management teams of companies all over the world.
This is what we call due diligence. That term is thrown around a lot, and it's a reason why most people shouldn't be individual stock pickers, because they don't have the time, the temperament, or the talent to really do what you do due diligence. So let's talk about really what it is when you investigate a company. You're traveling around the world, so you visit the companies, right? Obviously.
We visit the companies, we visit with their competitors, with their suppliers, with their customers. We go to trade shows. We really like to kick the tires and do that on a global basis.
So obviously the companies, you just don't drop in and say, like the IRS, we're here. we're here. So they know you're coming. And then I presume that you interview the management and so on and so forth. What's that look like?
Yeah, they know we're coming. Usually we do a lot of research before we meet with the company. And then, we have what we call an adult conversation with the management teams, where we're trying to figure out, what are the competitive pressures on the business? What are the opportunities? What are the strategic issues they're grappling with? And we have a conversation where we talk through that and try to understand what it is like to be in their shoes and what are the opportunities and the outlooks for their businesses.
And the interesting thing is that you also talk to their competitors.
We do. We call that the scuttlebutt, to get a holistic picture of a company or an industry. So you speak to the competitors, you try to speak to former employees, you try to speak to customers, to suppliers, to put that mosaic together to get a complete understanding of what it is that makes a business or an industry tick.
So before you commit our investors' money to a particular company, how long is the usual due diligence process that you do to investigate a company?
Yeah, that varies, as you can imagine. Sometimes we follow companies for many years before we finally pull the trigger to make an investment. But I would say it's not going to be any shorter than 3, 4, 5 months, because that's just the work required to make it through all the documents, to do the financial modeling, to do the due diligence, to have the conversations. It takes a lot of time. It's a little bit like investigative reporting, the way we sort of assess an investment and then pull the trigger.
Got it.
So, Christian, when you're looking at the financial metrics of companies, do you have any certain ratios or any screens that you weed out companies strictly by looking at the financials?
Yeah, I wish it was that simple. So there is a lot of sort of manual labor involved here, but there are certain things that we use for exclusion. So we want businesses that have sound capital structures. We don't like a lot of debt. We want businesses that have attractive margin because it implies that they provide a lot of value to their customers. We want businesses that achieve high returns on invested capital because that would point towards them having competitive advantages. So there are certain things, if they don't check the boxes, we exclude them. But then from there on, it's a lot more manually.
Mm-hmm. Now, Gary and I and our team are strong believers that our clients' portfolio should have exposure to equities outside of the U.S. market.
Exactly, yeah. So, I mean, especially today, I think the current P/E ratio on a backward-looking basis for the S&P 500 index is around 23, and our long-term average is a little over 18. And I know foreign markets, you probably know this, Christian, better than I, but I think the EAFE index, Europe, Australasia, Far East index, is somewhere around 13. And so there's quite a disparity on the current multiples of earnings for what you're paying for stocks right now abroad versus the U.S.
You are 100% correct.
So we think there's more opportunity, obviously, in the foreign market. The problem is when you start to talk about foreign companies, people get scared. If it's not if it's not in the U.S. domicile, I don't want to own it. So this is there's many. In fact, most of the big companies around the world are foreign companies.
That's right. And, I think we forget sometimes that the U.S. market is only, 63% of the world market, which is still pretty high.
It's huge.
Yeah, it is huge.
Right. So you're on the value side. So let's talk about, for our listeners that may not be familiar with the term value versus growth. So how does your work differ from somebody that's looking on a purely growth fund, somebody that's investing in the next Apple or Tesla or NVIDIA or whatever it might be? So you're looking at value. What does that mean just from a purely tactical standpoint?
Yeah, the great Warren Buffett used to say value and growth are joined by the hip. So it's not that straightforward to differentiate. But what it means is we care for the price we pay for the businesses we own or for the investments we make. Growth investors, they really care that the business grows, and they're pretty indifferent about what they pay for that growth. Where we differ is we try to assess what would you pay for this business. Very similar to some of your clients that own businesses, they have a pretty good sense of what their business is worth and what they would sell it for. So where the value kicks in for us is we always, every investment we make, we try to assess what would a rational person be willing to pay for that company if they would own the entire company. And growth is valuable. You can pay more for a business if it grows. That is very easy to understand. But we still care about the price. We still care about the valuation. We don't just focus on the growth. And, in metrics, that means the price to earnings ratio, the PE ratio, or the enterprise value to EBIT or EBITDA, those are metrics we do look at. We don't just look at the growth. We also want to make sure that we're paying reasonable prices for the businesses we acquire, for the investments we make.
Right. I like to think of value as good stocks that are cheap.
Yes, that is definitely a good definition.
Okay. And circling back to what your specialty is technology. Why don't you tell us about one or two of the gems that you may have uncovered overseas that nobody's ever heard of and what they do?
Sure. I'll give you a couple of companies that you probably haven't heard of in the tech space. There's a company in South Korea by the name of Naver, Naver. And Naver is the dominant search engine in South Korea. Google only has about 10-15% market share in South Korea. Naver has 70-80% market share. So they dominate search, which is a wonderful business. We all know that Google, Alphabet are wonderful companies. Naver dominates that niche in South Korea. And on top of that, they have a massive e-commerce business, so a little bit like Amazon. And then on top of that, they have a payments business like PayPal. So you get the dominant search engine, the dominant e-commerce platform and payments business in South Korea, and nobody has heard of at a very attractive valuation. That's a gem.
Well, we're up against a break here in radio. We got to take a break to make a profit. So if you'll hang on, Christian, we'll be right back after the break.
Thank you so much, Christian. Christian Heck, of course, is joining us. A wonderful, wonderful little addition to the show today, offering some unique perspectives. Joining Gary Abely and Joe Bert with the Certified Financial Group. If you want to hop on the air, join the conversation, feel free to send in your open mic inside the WDBO app. Open it up, push the open mic button down to the bottom, give me your best 10 to 15 seconds, and I'll play it back for the Certified Financial Group live on the air. If you want to join live and ask your question live, go back and forth a little bit. 844-580-9326 is the number to call. 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group. Welcome back to On the Money right here on WDBO 107.3 FM, AM 580, always streaming inside your WDBO app. A unique opportunity is in front of you. Pick up your phone, dial 844-580-9326, and just stumble across some wonderful financial advice for your financial future. The team with Certified Financial Group, Gary Abely and Joe Bert, joining us this morning. Call in 844-580-9326. We also have a guest with us today. Christian Heck is joining us to also put in some of his advice, and Joe and Gary and Christian are having a wonderful conversation right now, guys.
So for those listeners who may have just joined us, Christian is calling in from Manhattan this morning. He is a portfolio manager for the First Eagle International Value, International Equity, and U.S. Equity Dividend Strategies funds. And as I said earlier in the program, our strength here at Certified Financial Group is not picking individual stocks, because if you were listening, you heard that it takes a tremendous amount of due diligence, time, temperament, and talent to
travel
to really find that it's not just a hunch. Unfortunately, people treat the stock market and investing like a hunch. I think this is going to do well. So it's not a casino. I mean, in order to be a good long-term investor, you have to find the right companies. And that's what we call due diligence. And this is what good fund managers do. And this is what Christian does. And before the break, we were talking about how you search those companies out, how you find them. And he mentioned one that you found in South Korea that really dominates the search. What do you call it? Search engine market. Search engine market in South Korea. And what other gems might you have found in recent times, Christian?
Well, there is an interesting tech company by the name of Prosus, which is listed in the Netherlands. But what Prosus really is, Prosus owns 25% of Tencent, which is the dominant social media company in China. And, Chinese equities are quite cheap for various reasons, and Tencent is probably the best business in China, so it's cheap. But by buying that stake in Tencent through Prosus, through that holding company in the Netherlands that I mentioned, you get another discount. So you get a cheap stock even more discounted. And meanwhile, both Tencent and Prosus are buying back a lot of shares, creating value for shareholders. So that's another one that most people haven't heard of, which I think is sort of a very interesting opportunity today.
So as you said earlier in the program, finding the right companies, you spend months in many cases just researching the individual company, traveling to the company, talking to management, talking to their suppliers, looking at the financial statements, talking to their competitors before you make that decision. How many companies do you sort through before you make a decision?
Well, we're highly selective in terms of the investments we make. We make about 10 to 15 investments during the course of a year, and we probably engage with about 2,000 companies a year. So you can sort of see how that gets filtered out, and it's weeding out, filtering out how you end up with that final low list of investments we make in a particular year.
Well, Christian, we've talked about a couple individual companies, so I just want to remind our listeners that the reason we recommend mutual funds is there is significant risk if you put too much money in any one company. I'm wondering, do you limit exposure, or what percentage do you limit a specific company in your fund to, or do you limit it?
Yeah, we are highly diversified because to your point, there's risks involved, and we always tend to say, in advance, we don't know what our best idea will be at the end of the day. So we tend to own about 100 companies all over the world, where we usually don't have a single position being more than low single-digit percentage of the portfolio, so highly diversified. And we tend to hold them for a long time. I mentioned the time horizon of 7 to 10 years. We're very long-term investors. So it's a highly diversified portfolio, both in terms of geographies and industries, and it doesn't change that quickly either, given the long-term nature of our investments.
So what I'm hearing is that you spend a lot of time searching for the gems, and then you let the time play out to determine or to reinforce your decision.
That's exactly right.
Yeah. We're up against the break again, Christian, so hang on, please.
Thank you, Christian. If you want to join the conversation, get your question asked live on the air, you can call us at 844-580-9326, 844-580-WDBO. Send in your open mic to us inside the WDBO app. And we just had a question from a caller who wanted to get his question asked on the air by me. Well, I'll do my best. Again, if you want to call 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow.
But this is interesting.
With the Certified Financial Group.
Welcome back to On the Money, Central Florida's most listened to financial call-in show, brought to you by Certified Financial Group in Altamont Springs. It's the only show hosted exclusively by certified financial planner professionals. Monday through Friday, their CFPs provide financial planning and investment advice for a fee. But on Saturdays, the advice is absolutely free and has been for more than 30 years for their WDBO listeners. If you have a financial question you want answered by real fiduciaries, the lines are wide open. Call 844-580-WDBO. That's 844-580-WDBO. And enjoy the rest of the show.
Welcome back to On the Money right here on WDBO 107.3 FM AM 580, always streaming live inside your WDBO app. This is your chance to hop on the air with some certified financial planner professionals from the Certified Financial Group. If you want to join the conversation, we have Joe, Bert, and Gary Abely answering your questions today. The number to call is 844-580-9326, 844-580-WDBO, or you can send in your question via the WDBO open mic. Gary, Joe, and we have a surprise special guest if you're just joining us today.
Yeah, Christian Heck calling in from Manhattan this morning. Christian is a fund manager with the First Eagle family of funds on the value side. And for those listeners that may have just joined us, Christian was explaining to us the day in the life of a fund manager, what involved in due diligence. As our regular listeners know, are the strength that we have here at Certified Financial Group is to find the best money managers and mutual funds in the ETF world. And we are not stock pickers. And we are not stock pickers because it takes time, temperament, talent, and frankly, a lot of money to travel around the world and to sort out the various investments you have. You can't invest in stocks on a hunch. I mean, some people do, and they treat investing kind of like gambling. But in order to be a successful long-term investor, you need to have quality investments, and it takes the due diligence effort to find those. And Christian was kind enough to explain to us all the things that are involved. It takes months, and months to sort through the thousands of companies they have to end up with a half a dozen that they might invest in throughout the course of a year. And he mentioned us a couple of the gems that they found on the technical side. And Gary, you had some question there.
Yeah, Christian, so obviously your fund is a global fund, and for our listeners, that means that global funds typically invest both in the U.S. and abroad. And I know Vanguard and others are suggesting that this next decade we could see foreign stocks outperform U.S. stocks. So I have really two questions. One, right now, what is the approximate percentage of money that you have invested in the U.S. versus foreign? And really, why? And do you feel the outlook looks better for foreign stocks or U.S. stocks?
Sure. So the first question is simple. It's about 50-50 right now in our global funds. Half of it invested outside of the U.S., half of it invested in the U.S. What I would tell you, though, is that at the margin, we've been finding more opportunities outside of the U.S. And the reason goes back to what you said earlier. Valuations outside the U.S. are just so much cheaper today than in the U.S. The U.S. had an incredible run for the last 10 years, strongly outperforming international markets. But, we're students of history at First Eagle. And when you look at history, you'll see that there are these long cycles where international outperforms and then the U.S. outperforms. And it tends to balance out over time if you look over the last 60, 70 years. And now after 10 years of very strong performance of U.S. equities, of U.S. stocks, international stocks are cheap, and mean reversion is a very strong force. So we believe there's a good chance that the next decade will look a lot better for international stocks relative to U.S. stocks.
Well, thank you, Christian.
That kind of confirms what we've been telling our clients.
Exactly.
Well, while the NVIDIAs of the world are getting all the headlines, you want diversification because when that time comes around, you want to be able to have exposure in that particular area. Christian, this brings me back to, got to be 25 years or so ago when I had the privilege of interviewing Jean-Marie Everyard, whose name I'm sure you know. And we had a very, very similar conversation. Jean-Marie goes back to SOGEN, the world of the Societe Generale, which was the one predecessor company, I believe, of First Eagle. Is that not correct?
That is all correct. Jean-Marie started the strategy 45 years ago. He's a Frenchman, so I have the German accent, but I guess the theme is we do have a lot of international people on our team, as you would want to cover the world. For global investors, you want to have an international team. And Jean-Marie Aveyard, I would put him in the Hall of Fame of the all-time great investors. He's put together an incredible track record over the 30 years or so that he ran the First Eagle funds.
Yes, yeah, no question. Well, Christian, we're going to let you go and enjoy the rest of your Saturday afternoon here in Manhattan. I greatly appreciate your time.
Thanks for joining us.
And I think you've given our listeners some insight into what's involved in really making equity investments, picking individual stocks. As we know, that's a very, very difficult thing to do consistently. No fund manager always picks winners. But certainly if you're trying to do it on your own or listen to a stockbroker that's got a hot tip of the day, generally the hot tip is going to get you burned. And you want diversification, and you want an investment manager that is picking out what they believe to be the best investments. And our job is to find the best managers who pick the best investments. And we think a lot of you and your particular company. So thanks for joining us, Christian, and enjoy the rest of your day.
Thank you very much.
You're quite welcome. You're quite welcome.
Joe, I think that is probably a pretty good lead-in to, what do we do to find these mutual funds?
So tell me what we do.
Well, so we do what we just did, is we have mutual fund managers frequently come into the office, and they really tell us what their process is. We look at some passive funds, and we look at maybe they have some screens that seem to be working relative to their peer group, relative to the indexes. We use something called FI 360, Center for Fiduciary Studies, which is a score, if you will, that ranges from 0 being the best score to 100 being the worst. And those scores are based on 11 objective, not subjective, objective criteria about each fund. For example, the returns over 1 year, 3 year, 5 year relative to their peer group. Are they outperforming their peer group or aren't they? And so we use these fiduciary scores to ensure that we are selecting among the best mutual fund managers. One of the criteria, for example, is the mutual fund manager tenure, right? So if we have a fund and the tenure is 3 years, we're probably not going to be excited about that. We certainly wouldn't put any weight in the tenure performance if the lead manager is only there 3 years.
With the exception, if he came from another fund,
that's right,
managing the same stuff and had a good track record.
That's right. So we do see that. Well, for example, I think one comes to mind. I think the Fidelity Growth Manager came from or went to the Fidelity Blue Chip or vice versa. I can't remember now. But certainly one had a long-term history managing large cap growth within even the same company.
Right.
And so you do have companies that plan for retirement, and oftentimes fund managers work within a team as well.
Right.
So when one leaves, it's not too disruptive.
But the interesting thing is that when a fund manager, let's say Christian has a great track record, been there now for 13 years, doing well. If he decides to retire or gets hired away, because these guys are like superstars, they sign a signing bonus. If he leaves, the fund company has no obligation to tell you, that great manager that we've had over all these years, he's no longer here, but we got the new guy.
Right.
However, with our system, when that pops up, we see it immediately. Exactly. And that's when we go to work to determine whether or not we want to continue riding that horse. And if the new guy coming in, the new jockey that's going to be on the horse has no track record.
That's exactly right. We search for that criteria at least monthly to make sure that we do have the latest information for each of those funds. And we even, go a step further. A lot of people don't know, Joe, that one mutual fund might have 10, 12, 15 different share classes.
That's right.
So one of the reports we do for our compliance department is to ensure that we have our clients in the lowest possible share class.
And we have the ability to buy the lowest share class, what we call the institutional class share, simply because the amount of money that we manage.
That's right. Yeah, when you manage, what is it, over $2 billion, I think, right? Between
almost 2.5.
Yeah. So that helps give us the clout to get our clients the lower cost share class, which is very preferable because sometimes there's a % difference between these different share classes.
Yeah,
which surprises a lot of people.
It's the same name fund,
right? Exactly,
but it's what you're paying for. It's and one of the responsibilities that we have to be sure that our clients have the best fund at the lowest price. That's exactly it. And of course, we don't have any house brand.
That's right. That's what I love about this firm. We are independent. While we custody our assets with either Schwab or with Fidelity primarily, we don't necessarily use, Fidelity or Schwab funds. Some of us do if it's best in class, right?
But there's nothing with the certified name on it.
That's right.
You go to some managers today, and 2 or 3 of the investment that you have happens to have their name on it, and you're selling the. I think so.
I think it's a conflict.
You're selling the house
personally.
brand. Yeah.
Call it what it is.
Yes.
So,
all right, it's a conflict.
Now, some people may have tuned in for our topic of the day, and I
Yes.
thought I would run through that.
Good
we
idea.
have time right now?
We do have time.
All right. So what should we ask our aging parents? And there's 10 items, and actually. A good friend and client of mine, Jeff, gave me an 11th, which is ask your parents where they hide their cash. And there's a lot to that.
Yeah.
Because there are people that hide gold or actual physical cash
In the walls.
on their property. Well, I know of somebody who hid some gold in a fireplace. So it is something you do have to ask because hey. Things happen. If you travel on I-4, you see it every day. All right, so real quick, things to ask your aging parents. Do they have a financial plan? That's number one. And, I would say added to that, does the financial plan indicate success? When you do those Monte Carlo simulations, are they going to run out of money? Do they keep a list of all of their accounts handy? I have a folder that says, if dead, start here. It has all my passwords, my account numbers to make things easy for my family, and I recommend everybody do something like that. Where is your will physically? Where is your will kept? And am I the executor? Do I want to be the executor? Do I want to take that role? Does my family have a prepaid burial plot, or do they have memorial arrangements? Is there any life insurance that I should know about? If you have life insurance but you don't tell anybody about it, that's going to make it more difficult for the family, especially if there's a cash need for the funeral. Any special bequests, any for family or friends? I had a good friend that passed away, and he had an old watch that he said he wanted me to have. And I was, the watch had no value. This was strictly sentimental, but he was a dear friend, and I got together with him for breakfast for probably over 20 years, and I was a little disappointed that, number one, I wasn't invited to the funeral.
Really?
Well, it's, that he was older when he passed. He was 96, and he wasn't great at communicating with the family. So, special requests are really important. Honor those special requests. Financial power of attorney. Who is it, right? Who needs to take care of things? Do I have a living will? What are my wishes for medical care? Your family needs to know this. Here's a tough question to ask. Have you forgotten your bills or had trouble balancing your checkbook? In other words, are you showing some signs of dementia? Do I have a long-term care policy? Do your parents, I should say, have a long-term care policy? Can I read it? In other words, what is this really going to cover? Sometimes people buy things thinking it's a great policy, and we look at it and we say, well, that's good. That's going to cover you for 6 months. And here's a great question to ask. This is the final one. What is your opinion on assisted living? Let them, open-ended questions like that will start the dialogue. A lot of people will say, I'm never going into one of those places.
Yep.
And you're not going to put me in one.
You hear that more often than not.
And then there's sometimes the expectation that family is going to take care of aging parents, and sometimes that perception is wrong. I've had some really tough conversations with children and parents in the same room where parents thought they would be living with the children, and children said, no, that's not going to happen. So, these are the kinds of questions you want to ask your parents before it's too late, right? Have a plan.
So I would guess that if somebody wanted that list, you would be happy to send it to them.
Oh, absolutely.
And how do they get a hold of you?
They can email me at gary@financialgroup.com, and we'll be happy to send the list.
So that's gary@financialgroup.com. Gary's got to leave the program here because he's got to jump up and do one of his famous workshops here. The topic is
healthcare in retirement.
Yeah,
we talk about long-term care, and we talk about Medicare ABCs, and And the heads will be spinning here soon. It is complicated.
This is a standing room only workshop, and we got a full house, so I'll let you go and go do your magic, and I'll try to carry
have a great weekend.
Try to carry on the program without you.
All right, thank you.
Thank you.
Thank you very much, Gary. Have a good workshop there. We do have Charles Curry standing by off the air to answer your questions. That number is 407-869-9... I'm having a brain fart now.
9800.
9800. Thank you so much. 407-869-9800. I'm going to say it again since I had a brain fart there. 407-869-9800 is the office for the Certified Financial Group. Charles Curry standing by off the air to answer any questions that may have popped up for you during this week or during this hour. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group. Welcome back to On the Money right here on WDBO 107.3 FM, AM 580, always streaming inside your WDBO app. Gary Abely stepped away, but Joe Bert, a certified financial planner with the Certified Financial Team, is still with us here to wrap up the show. If you have any questions for the team at Certified Financial Group, the number to call is 407-869-9800, 407-869-9800. Charles Curry is standing by to answer your questions, or if you want to swing down by the office at the Certified Financial Group, there's plenty of cool little workshops here coming up, right?
Yeah, we have one May 29th, a week from Wednesday, Social Security options, when it's time to make that decision. As I said in our ad, you got to be careful, because if you make the wrong decision, you may not get a do-over. So you got to be very careful. And Charles Curry is going to cover that. It's at a Wednesday evening, 6:30 to 8, I believe. Offer some refreshments, give you some great information, and show you the mistakes that people make and show you how to avoid those mistakes. You got to register. Go to our website. That's financialgroup.com. Financialgroup.com. Click on events, and you can make your reservation right there. This one fills up fast. So if you're interested, I suggest that you book it. And to conclude, as our listeners have been with us now for the full hour, we had the privilege of talking to a fund manager from New York this morning about what he does, what his day is about, what their fund is about, how they select the funds, and the due diligence they go to in selecting the individual investments that go into the funds that they manage. And then what we do here at Certified Financial Group is we sort through all those fund managers, those tens of thousands of mutual fund and ETFs that are out there, to find the very best funds to use for our clients. And we use a scoring system called FI360, and we're offering this to our listeners totally free. If you'd like to have your funds or ETF scored, you go to scoremyfunds.com, scoremyfunds.com, put in the tickers. If you don't know the tickers, there's a pull-down menu, and you can find your ticker right there. And within 48 hours, we will send you a score on your funds. And if you'd like to follow up with that, and we'd be glad to talk to you about that. Absolutely free. We've been doing this for our listeners here in Central Florida for quite some time. And if you want to avail yourself of that, we encourage you to do it. And appreciate the time this morning, Josh. It's been a great program, and we'll see you all next week.
You've just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
It's